Good day and welcome to Some TV Business Daily. I am Jennifer Obade, and today we bring you the latest development making headlines across Nigeria's economy, markets, and business world. Nigerian Exchange ICT stocks has emerged as one of the market's brightest stories in 2025, with gains as high as 993% of some players. The combined market capitalization of performing ICT stock jumped 58% year-on-year to 18.61 trillion naira in November 2025, up from 11.7 trillion naira in November 2024. This growth is driven by sustained share price appreciation and increasing investor confidence in Nigeria's ICT sector. Leading the pack, NCR Nigeria saw its share price at 333%, rising from 5.00 naira to 54.65 naira per share. MTN followed with 135.3% of increase, moving from 200 naira to 531.70 naira per share, while CWG gained 133% to 17.95 naira. Other notable gains include Transact up 122.31% to 14.5%, Chams holding up to 61.2% to 2.95 naira. Omatek up 20.27% and Airtel Africa up to 5.24%. Experts attribute the growth to stable macroeconomic factors, growing impact of ICT service, and higher tariffs boosting profitability. The ICT sector remains highly relevant in key industries such as financial service and continues to draw growing attention from investors. Nigeria's food and beverage imports rose to 5.27 trillion naira in the first 9 months of 2025, up from 4.71 trillion naira in the same period of 2024, marking an 11.74% year-on-year increase. The growth was driven by a sharp rise in primary food imports, while processed food imports grew at a slower pace. Primary food imports climbed to 2.54 trillion naira, up from 2.11 trillion naira, reflecting to 20.63% increase. Processed food imports rose modestly to 2.73 trillion naira from 2.61 trillion naira, representing a 4.55% year-on-year growth. Industrial demand drove the increase, with processed food imports from industrial use rising to 1.69 trillion naira, up from 1.49 trillion naira. In contrast, household consumption of imported processed food weakened, declining to 1.63 trillion naira from 1.11 trillion naira. The data shows Nigeria's food import growth was led by primary food items and industrial demand, while household consumption of imported processed food weakened over the 9-month period. Lasaco Assurance PLC plans to raise fresh capital through a rights issue and private placement to triple its minimum share capital to 36.08 billion naira from 11.08 billion naira. The move was approved by shareholders at the company's extraordinary general meeting. The capital raise aims to strengthen the insurance financial base, enhance underwriting capacity, and support long-term growth initiatives. The company's share capital will rise by over 25 billion naira, with the new shares ranking pari passu with existing ordinary shares. The board has been authorized to determine the final terms, structure, and timing of the rights issue and private placement, subject to regulatory approvals. Lasaco's current market capitalization is 26.6 billion naira with outstanding share of 11.1 billion naira. The stock closed at 2.40% share on the Nigerian Stock Exchange, having lost 22.3% of its value year to date. The Federation Account Allocation Committee has shared 1.928 trillion naira as Federation allocation of November 2025 among the federal government, state government, and local government councils. The allocation was drawn from 2.343 trillion naira generated from statutory revenue, value-added tax, and electronic money transfer levy. The federal government received 747.159 billion naira, states got 601.731 billion naira, and local government council received 445.266 billion naira. Oil-producing state received 134.355 billion naira as derivation revenue, representing 13% of mineral revenue. Before distribution, 84.2551 billion naira was deducted as the cost of collection, while 330.625 billion naira was allocated for transfers, intervention, and reforms. Gross statutory revenue for the month stood at 1.736 trillion naira, lower than the 2.164 trillion naira received in the previous month. The communique indicated that VAT revenue dropped to 563.042 billion naira, compared with 719.827 billion naira distributed in the preceding month. The electronic money transfer levy generated 43.400 billion naira, with the federal government receiving 5.947 billion naira, states 19.823 billion naira, and local government councils 13.876 billion naira. Nigeria's Federation account recorded total accruals on 23.06 trillion naira between January and October 2025, surpassing the 21.43 trillion naira recorded in the whole of 2024. The Revenue Mobilization Allocation and Fiscal Commission attributes the growth to digital revenue, tracking system, fiscal discipline, and reforms expanding the revenue base across oil and non-oil sectors. The Nigerian Tax Act 2025, effective January 2026, aims to streamline tax administration, reduce compliance costs, and strengthen revenue governance. The Act harmonizes fragmented tax laws, removes duplication, and promotes a more predictable, transparent, and sustainable fiscal environment. Chairman of the Tax Reform Committee, Taiwo Ayedele, disclosed that certain basic taxes include those on food, shelter, and education will be eliminated from January 2026, easing the burden on citizens and improving equity in the tax system. Elon Musk has become the first individual in history to cross the $600 billion wealth threshold with an estimated net worth of $677 billion. The milestone reflects a sharp rise in his wealth, largely driven by the soaring valuation of his private company, SpaceX. A tender offer by SpaceX valued the company at $800 billion, up from $400 billion in August, adding approximately $168 billion to Musk's fortune. Musk owns an estimated 42% stake in SpaceX, and his other assets include a 12% stake in Tesla, worth about $197 billion, and 53% of XAI Holdings, valued at approximately $60 billion. Tesla stock options from his 2018 CEO Performance Award are valued at $69 billion, pending the outcome of Musk's appeal, with an estimated $425 billion lead over the world's second richest person. Google co-founder Larry Page, Musk is closer to reaching $700 billion than losing his spot as the world's richest individual. Nigeria's headline inflation rate eased to 14.45% in November 2025, down from 16.05% in October 2025, beating President Bola Tinubu's 15% target. The National Bureau of Statistics attributes the decline to easing price pressures across the economy. Urban inflation stood at 13.61%, while rural inflation was 15.15%, with food inflation at 11.08% year-on-year. The decline marks a significant slowdown, with core inflation, including volatile agricultural products and energy, at 13.04% year-on-year. Key food items like dried tomatoes, cassava tubers, and eggs saw price increases. The government has projected a 15% inflation rate by the end of 2025, a target now seemingly within reach. The easing inflation rate is a positive development following several months of elevated inflation. Experts had expressed doubts about the achieving target, but the latest figure suggests progress. Central Bank of Nigeria has approved 82 Bureau de change operators under its revived regulatory framework, with more approvals expected soon. The CBN's new capital requirement for BDC operators are 2 billion naira for a Tier 1 license and 500 million naira for a Tier 2 license. The approval marks a key milestone in the CBN's effort to reform and sanitize Nigeria's retail foreign exchange market. APCON President Aminu Gwadebe says the 82 approved operators are only the first set, and many others have paid and are waiting approval. The CBN has warned the public against dealing with unlicensed foreign exchange dealers, emphasizing that only operators listed on its website are authorized to conduct BDC business. The new regulatory framework has significantly reshaped the BDC sector, with thousands of operators delisted for failing to meet compliance requirements. The CBN aims to strengthen the sector and promote transparency. Nigeria's non-oil export surged to a record of 9.2 trillion naira in the first 9 months of 2025, rising 48% from 6.2 trillion naira in the same period of 2024. The growth is attributed to the 2023 naira devaluation, improving exporters' competitiveness in global markets. Key contributors include chemical and allied industries, 845 billion naira, prepared foodstuffs, 692 billion naira, and vehicles and aircraft at 550.8 billion naira. Non-oil exports average nearly 1 trillion naira monthly, with agricultural export at 786.6 billion naira, raw materials at 1 trillion naira, and solid minerals at 100.8 billion naira, driving growth. However, oil and gas still dominate export earnings, accounting for 86 to 88% of total exports. The data highlights Nigeria's uneven trade structure, with 2 trillion naira in manufactured exports versus 4.75 trillion naira in imports. The surge confirms exporters are responding to improved price incentives, but diversification remains limited. Nigeria's import bill for boilers, machinery, and appliances reached 8.64 trillion naira in the first 9 months of 2025, reflecting sustained industrial activity and infrastructural expansion. The imports include power generation machinery, industrial equipment, electrical appliances and heating systems essential for construction, manufacturing and oil and gas operations. The NBS data shows imports were 2.87 trillion naira in Q1, 3.18 trillion naira in Q2, and 2.59 trillion naira in Q3 2025. This spending indicates Nigeria's heavy reliance on foreign-made mechanical and electrical equipment for powering industries and supporting commercial activities. The industrial sector grew at 3.77% in Q3 2025, and imports accounted for 41.41% of total trade, reaching 16.12 trillion naira. Nigeria maintained a positive trade balance with a 6.69 trillion surplus. Legend Internet PLC Series 1 commercial paper insurance has been oversubscribed by 199.7%, raising 10 billion naira. The refunds will support broadband infrastructure expansion, working capital and strategic acquisition. The company's CEO, Aisha Abdulaziz, attributes the success to maintain confidence in Legend Internet's performance and credit quality. The insurance is part of Legend Internet's 10 billion naira multi-layered financing program approved by shareholders in November 2025. The company plans to expand nationwide, strengthen its financial position, and enhance service delivery. Legend Internet achievement reflects its disciplined financing framework and operational strength, with a BBB long-term rating and A3 short-term rating from Acosto & Co. Limited. Dangote Group has appointed Dr. Hassan Mahmood as its group chief economist, leveraging his 30 years of experience in economic policy and central banking. Mr. Mahmood will advise on economic strategy, macroeconomic trends, and policy implications, supporting Dangote's expansive operation in cement, sugar, fertilizer, petrochemicals, and energy. The appointment reflects Dangote's emphasis on economic analysis and policy intelligence and volatile market and exchange rate pressures. Dr. Mahmood's expertise will reform strategic decision, risk engagement, and financing structures for major investment like the $20 billion Dangote Petroleum Refinery. Dr. Mahmood brings a strong academic background, including a PhD in economics from the University of Surrey and professional certification in banking and anti-money laundering. He is a fellow of several Nigerian professional bodies and serves as president of the Nigerian Association for Energy Economics. The naira weakened to 1,483 naira per dollar amid hawkish Fed stance and year-end FX pressure. The U.S. Federal Reserve stance and high retail demand are driving the Nigeria's decline. Importers and retailers are sourcing dollars for Christmas and New Year's sales, boosting demand. The Nigeria has appreciated 5.7% against the US dollars year to date, thanks to CBN intervention and diaspora remittances. However, the Fed hawkish tone and robust U.S. labor market are strengthening the U.S. dollar, influencing Nigeria's FX markets. The Fed is expected to cut rates, but hawkish official warns of stale inflation progress. The U.S. dollar index is trading flat at 99.20, with traders awaiting the Fed's policy decision. The U.S. Federal Reserve's 25 basic point interest rate cuts could ease pressure on Nigeria's naira and improve foreign portfolio investment flows. Analysts says the move may influence investor appetite for emerging markets, affecting the strength of the dollar and global capital direction. A weaker dollar could offer relief for countries like Nigeria by reducing external borrowing costs. Nigeria's monetary authorities will closely monitor U.S. development to manage exchange rate pressures and attract stable capital inflows. The Central Bank of Nigeria's cautious approach to interest rates is driven by inflation concerns and a desire for structural stability. Experts believe Nigeria's recent exchange rate stability is driven more by domestic reforms than dollar weakness. The Nigeria remain undervalued, giving policymakers room to sustain reforms. Foreign investors assess Nigerian assets differently, focusing on political stability, currency risks, and social condition. The Central Bank of Nigeria, CBN, has resumed using a scriptless securities settlement system, S4, for electronic submission of treasury bills, auction bids. The CBN will offer 365 billion naira across 3 short-dated tenors, 91-day, 182